We have lots of Tesla stock breaking news to go over here in today's video, most of which is actually very exciting. Martin Visha, he is the head of investor relations at Tesla. He says, congrats, Mr. James May. We talked about this in the last video. He was the host of Top Gun for a long time. He has like 6 million followers across different platforms. He says, watched your show all my childhood. Hope you like the car. You should get the performance one once that comes out. So indeed, the performance Model 3 is likely well on its way into production. And just when everyone has fears about Tesla demand, check this out. Estimated delivery dates for the new Model 3 long-range orders in the US have changed to March through April of 2024. This change comes just 2 weeks after it changed to February through March of 2024 from January through February. Rear-wheel drive Model 3 still shows February through March. So indeed, it looks like there is a lot of positive demand for the long-range Model 3. Normally, I don't think this would be exciting news, but given how much fear there is about a slowdown in Tesla demand, I think, well, this is fantastic. And let's just be honest with ourselves. Tesla stock has not done well. Analysts, even some of your most bullish analysts, are starting to get near-term pretty bearish on Tesla, when in all reality, the Cybertruck is ramping, and we just got a launch of the Model 3 in the US. The Model 3 has basically never been updated before, 2017, of course, being the last update, but that was 7 years ago now. There could be a lot of demand for this product that I don't think anyone is really expecting. So good news on this front is, well, going to be really good news. Ron Barron's son, David Barron, thinks Tesla could hit $1,200 per share by 2030. Quote, "While he may not be growing 50% a year as the company thought," Barron said in an interview, "this year is a tough environment. He's still growing volume by 15 to 20% per year and making us $7,000 per car of gross profit." Barron at 43 became co-portfolio manager in 2018 with his father, Ron Barron. Tesla will invest $500 million to install a Dojo Super Computer in Buffalo, New York, according to New York State Governor Kathy Hochul. It will process millions of terabytes of data from its EVs to improve the safety and engineering of FSD. This was announced and televised via a speech from the governor. Like, this is massive, if you will, advertising for FSD that just took place. Elon Musk confirms the New York governor is correct that this is a Dojo supercomputer. But $500 million, while obviously a large sum of money, is only equivalent to a 10,000 H100 system from NVIDIA. Tesla will spend more than that on NVIDIA hardware this year. The table stakes for being competitive in AI are at least several billion dollars per year at this point. Elon Musk also confirms that there are plans to buy chips from AMD later this year. Sawyer Merritt posted this photo of Tesla's annual R&D spend. He says in 2023, Apple spent $29 billion on R&D, a greater sum than the total amount Tesla spent on R&D in the company's history. Really shows you how much innovation Tesla extracts per R&D dollar spent. Elon Musk responded and said there are gigantic differences in the effectiveness of R&D spending between companies, and that's very important because you don't have unlimited dollars to throw at something, right? If Tesla can see these kind of returns on their R&D, that creates more value for you. So when Tesla is essentially saying they could spend about $10 billion on R&D in 2024, yes, it was a head scratcher for some individuals on the conference call. That's what Morgan Stanley said. Specifically Adam Jonas, that's what he said. It was a eyebrow raiser or head scratcher, whatever terminology he used. But that is going to potentially mean, most likely mean, better innovation, better returns on your investment. You want to see Tesla investing aggressively in research and development. And this is pretty surprising. It looks like the Model S is trending on X. It also appears that Cathie Wood with ARK Invest has started to aggressively buy the dip in Tesla stock. On Friday, purchasing 151,984 shares of Tesla for the ARK K fund and another 30,557 shares of Tesla for the ARK W fund. And I'm sure this is a trend that will likely continue. Starting next month, Ford and GM vehicles will gain access to more than 12,000 Tesla superchargers in North America. At the same time, Lincoln is cutting 200 US dealerships in a 2-year consolidation push. The brand is also putting its EV strategy on hold. And now you have another auto company that is holding back on their EV plans. That is good news for Tesla. Maybe not over the next 12 or 24 months, but let's revise this in 5 or 10 years. And well, we'll know that this was a positive for Tesla. As everyone else is scaling back and Tesla is pushing ahead, Tesla is going to become the clear and dominant winner for at least the US for a longer period of time, if not indefinitely. Same goes for Europe, and well, China is still a toss-up. Tesla currently has 2.92% of all shares outstanding sold short. That totals $14.72 billion worth of short positions, and you do have cost to borrow fees around 2%. Option activity on Friday for Tesla stock from hedge funds and institutions was very positive. You had 861 orders totaling $847.12 million with a positive order value of 68%. So 68% of large trades from hedge funds and institutions were positive. That is either buying calls or selling puts. Global inventory numbers for the Model Y are, well, shooting higher. You are now over 9,000 Model Ys in global inventory, whereas the Model X, as you can see here in purple, is staying about the same at 1,800. The Model 3 is less than 1,000, and the Model S is still less than 1,000. These are sitting at pretty much 12-month lows as far as inventory, but your Model Y is, I believe, at an all-time high for inventory. Google Trends data indicates a slight deceleration in Google Trend activity for the entire Tesla lineup. Tesla continues to run about 400 different ads via Google. The percentage of stocks above their 50-day moving average on Friday declined about 0.5% to 65.23%, well off of the highs that we seen late December when about 86% of stocks were above their 50-day moving average, whereas your S&P 500 briefly hit a new all-time high on Friday. So the markets are very top-heavy right now. Your magnificent 7 names, for lack of a better word, are the ones that are holding up our markets and pushing markets higher. A key sector being the chip sector, the semiconductor sector, and your average stock has not done well in 2024, let's be honest. Next week is going to be vitally important because we have the jobs report and ISM data coming out. We also have the Fed meeting on Wednesday, and you have big tech earnings throughout the week, notably Microsoft and Google on Tuesday, and then Amazon, Apple, and other big players like Meta that report on Thursday. So, I mean, Tuesday, Wednesday, Thursday, Friday, those are going to be huge days. Even Monday, you're going to get the largest stock in the Russell 2000 that will report earnings, and that is Super Computer, SMCI. Here's your earnings calendar for the week ahead. If you guys want to pause this, take a screenshot, or look at it for yourselves on X, I'll go ahead and reshare it right now. So if you guys go follow Michael Tyler, you will see this. These are your most anticipated earnings releases of this upcoming week. SoFi Monday pre-market and Super Micro on Monday after hours. Those are going to be the big dogs for Monday. And then you have GM, UPS, JetBlue, Marathon, Pfizer Tuesday pre-market, Microsoft, AMD, Alphabet, Starbucks Tuesday after hours, Boeing, MasterCard Wednesday pre-market, Wednesday after hours Qualcomm, and then Thursday you're going to have Amazon, Apple, Meta after hours. I'll be damned. Flint's GM assembly plant delays the start of Sunday's shift for the Lions game. The plant will begin third shift at 10:45 p.m. rather than 9:45 p.m. on Sunday. Man, if Tesla did that, Tesla stock would at least fall 1%. On Friday, 10-year Treasury yields were pretty much unchanged. We did have some economic data on Friday. PCE came in line with expectations. Same for personal income. Personal spending came in higher than expectations, but that is really not inflationary. It's more so showing the economy is in a pretty good place. If 70 to 73% of economic activity and the calculation of GDP is based on people spending money, while people spending more money, it's not necessarily going to be inflationary because not everyone's getting stimulus checks and there's not all of these supply chain issues minus the Red Sea situation. There's more deflation out there than inflation. I think that's pretty safe to say at this point, but it does show we're likely seeing a pretty strong economy right now, really supporting that soft landing narrative. Something to watch big time heading into next week, especially with the Fed meeting, is the 10 2-year yield curve inversion. If this thing uninverts, you could see fear in the markets that maybe we are heading into recession. Normally, recession fears can be equally as painful for stocks than an actual recession. Think about 2022 and all of the carnage that we've seen. You were never technically defined in a recession. You did have 2 negative quarters of GDP, but stocks did terrible. Tesla stock on Friday in regular trading was up 0.34%, including after hours up 0.45%. This was the largest gain for Tesla stock you have seen in about a month. As I have previously talked about, I do think this is the bottom for Tesla stock, minus any more price cuts. If we get more price cuts, the stock will fall more, or as long as next week is not an utter disaster. And we'll talk about that more coming on Sunday and my actual expectations for this upcoming week. But there's definitely some problems here with stocks trading at all-time highs, heading into big tech earnings, potentially a hawkish Fed, and potentially an uninversion of the 10 2-year yield curve. It's not looking that good, but I do think Tesla stock probably outperforms given it's fallen 26 or so percent in a month. And if you look at Tesla's RSI, you're at 18.20, which is one of the most oversold levels you have ever seen for Tesla stock. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Costing nothing to do. It's absolutely free 99. If you guys want to come trade with us live in real time, check out the link down below in the description of this video. Join a community of over 200 different members over there. You guys have a fantastic rest of your day, a great weekend, and I will see you in the next one.